Hello, everyone. We are doing another video. This is the third, I think, this year, which is pretty good for us. So that's nice. And this presentation today is about a company we've just invested in called Essent Group. So with that being said, let's just jump into the presentation straight away.
Right. First of all, who are Essent Group? What do they do? So Essent Group, they're a mortgage insurance company. They operate in the US market and they're headquartered in Bermuda. The company was founded back in 2008 and was listed on the New York Stock Exchange in 2013. As a mortgage insurer, Essent Group are responsible for paying out claims to mortgage lenders in the event that a borrower defaults on their payment. And the way we understand the business is, for example, a bank will give out mortgages to borrowers like you and me, and then the bank will go to Essent Group to insure those mortgages so that they can reduce or mitigate their own risk. And Essent Group in turn will insure its portfolio. So what that means is it transfers some of its risk to another insurance company known as a reinsurer, which is just insurers getting insurance off of other insurers. We think this practice we know this practice is normal within the insurance industry. Companies often spread their risk around via insurance. It's a common practice.
Great. So moving on to why we invested in Essent Group. So in other videos, we have mentioned our new investing system, so we won't go into detail about it here. But essentially, we look at a company's financial data to determine if it's a quality company. And in our opinion, Essent Group definitely qualifies as a quality company. So if we move on to the revenue chart, we can see here that revenues have grown a lot over the last 13 years, which we think is great because we want to invest in companies with a lot of growth. This is a very impressive revenue chart. And then moving on to net income, we can see the same trend, but it was negative for the first 3 years, which is quite normal for a young company to have a negative net income in the first few years. But it's the same trend, high growth in net income, which is great as well. Same when we move on to free cash flow. It's grown a lot, which is very important to us as shareholders because it means that the company is generating cash for us. Often younger companies will have for example, a positive net income, but a negative free cash flow. So it's not actually generating a lot of cash, but that's not the case for Essent Group. They're generating a lot of cash for us as shareholders, which we think is great. And then moving on to the last chart we're going to look at, this is debt to equity. And we can see that Essent Group's debt is very low. We usually look for a max threshold of 100%, and this is nowhere near that, which is great, which means that the company has generated a lot of growth with very little debt, which we love to see. And then moving on to our investment, so we did a free cash flow valuation, and based on that valuation, we estimate that the fair value per share is around 68, but we think it's probably higher because our valuation is very prudent. And then we bought shares of a price around 39 in both our model portfolio and in our real portfolio. And we invested in March of 2023. And we're recording this video in mid-April 2023.
Right. Moving on to the risks. The first risk is that the housing market might be in trouble now that interest rates are beginning to rise, essentially a repeat of 2008. Being a mortgage insurer, this would be a direct risk to Essent Group if borrowers start to default on their payments as a result of this rise in interest rates. Also, we don't have a history of Essent Group before 2010, so we don't know how they would perform in a housing market crash. And then the second risk is that we've not done a lot of qualitative research. Our research is more quantitative. So as a result, there might be things that we have overlooked, but that's something that we're aware of.
Yeah, and with that being said, that's the end of this video, and thank you for checking it out. Bye.
Bye.